Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today I want to define two terms that I didn't even know myself when I first started investing, but then something that really came, I guess, personal for me in terms of location as I grew in my investing career. So that question is, what is a bull market, what is a bear market, and why do they call them these things? So it's actually a pretty easy question, and once you start to get it, you're like, oh, okay, I see why. So here you go. When we say a bull market, or you are bullish about a company, a stock, or the economy, that means that you are optimistic, that you think this company or stock or whatever you think it is going to go up. We say this because a bull, when it strikes with its horns. It usually strikes upward. For the opposite thing, for a bear normally strikes down when it is, I don't know, attacking a fish or whatever it is that bears eat. I watched Winnie the Pooh. I didn't see Winnie the Pooh do this that often, but I did watch Yogi Bear. I don't think he did this either. However, you get the point. But when a bear strikes, it strikes downward. So when you are bearish about a company, bearish about a stock, or the economy is in a bear market, or the stock market rather is in a bear market, then that means it is going down. That is how we come up with those terms. Now, the personal connection for me is I was a financial advisor on Wall Street, and my last job was on Wall Street at literally Wall Street. That's the exit I got off on the train. And in front of me was the Wall Street Bull, or the charging bull, that I would see every single day. And then right behind me, actually 2 streets behind me, was the New York Stock Exchange. So it's really cool to have read about this stuff, to be an investor for a while, and then run into these things on a daily basis. It was so common that me and my son have a few pictures in front of the Wall Street Exchange. The cutest picture of him, one of them anyways, millions of cute pictures, but one of the best ones we have is the day that Pinterest went public. He owned Pinterest at one point in time. It was him right in front of the Wall Street Exchange, right in front of the New York Stock Exchange when Pinterest went public, which is really awesome. So got to experience a lot of that stuff. Obviously, it's all pre-pandemic, and it really kind of, again, hit home for me. So how do we kind of measure this for the stock market, and how do we know when one starts and one ends? Now, from my experience, I don't think we have a real technical definition like we do for a recession. There's a textbook definition of when we can call a recession a recession. But a bear market, I don't recall having a real strong definition for it. However, we have a decent one. So from my recollection and my experience, 20% or worse is what we call a bear market, and that's when things obviously are real bad, right? So a bull market is when it's not a bear market. I know it sounds kind of weird, but I'm going to explain it. So basically, we kind of use the bear market as kind of think of it like a bookend. So in between bear markets, when the market is down 20% or more, you clearly have a bull market in between those two. So for example, let's go for the last 2 bear markets that we had. So you had the coronavirus pandemic in 2020, so March 2020, right around there. I think the market dropped around 30 to 38% if I remember correctly. So that was a bear market, and we were in the longest bull market from 2020 going all the way back to about March 2009, and that was the longest bull market. So right after the last bear market and between the next one, that's where you have these bull markets. Generally, obviously, the stock market will soar, right? But sometimes it can be kind of meh, because you can have a year where it's down 5%, but it's still not a bear market. So until you are down 20%, it's still a bull market until otherwise, right? The longest bear market, and I took notes on this, was 1987, I believe. Yes, December 1987 to March 2000. And that was from one of the worst times in the late 80s. I'll tell you why in just a second, but one of the worst times in the late 80s, from December 1987, it took off all the way up until the dot-com boom, or dot-com bust rather. And this was the strongest, not the longest, but the strongest bull market, gaining 582%. And again, from 1987, which wasn't all that great, I'll tell you why in just a second, again, all the way to the dot-com bust. You had those 2 bookends for a bear market. In between that, one of the strongest bull markets. And then it continued, stopped until what was the Great Recession, stopped. We had a bear market, and then you had the longest bull market up until the coronavirus, and you kind of see how this process kind of goes. I kept mentioning 1987 because we had Black Monday, October 19th, 1987, one of the worst single day drops in the history of the stock market. You don't really hear about Black Monday unless something bad happens, which is what we saw and why we heard it so many times last year in 2020 when the coronavirus pandemic was really brand new. Kind of used to it now, unfortunately. So that's kind of how we come to understand bull markets, bear markets, what they are, how they operate. Generally, again, bear market, the stock market is down 20% or more. We're pessimistic. It's not fun for most people. People are selling, usually not acting in their best interest, but hey, that's what irrational people do from time to time. And then a bull market is when things are going up, everybody's optimistic and things are going well. It does not mean that in between times that the market won't have any jolts, that it won't be volatile. That can still happen because from March 2009 to March 2020, there were a few negative years, not many, but there were a few negative years in between there. Stocks can rise and fall all the time, but just because it doesn't mean that it is a bear market. So the way that we define this, bear market down 20%, and that bear market is there up until the stock market starts to rise again. Some sources say that once the stock market is back up 20% or more, that continues to be, at that point, that continues at what's called a bull market. Really depends on who you asked. But those are the best definitions for you. I like to use those bookends, down 20%, bull market until we're down 20% again, and that usually kind of helps you to visualize that. But that is what it's called. That is why it is called that way. And that's pretty much it. Super simple once you kind of get a visual hold on it. And that's it. So right now, technically, you could say that we are in a bull market. We saw the quote unquote recovery from the stock market perspective, and we were actually positive at the end of 2020. So I would consider this a bull market still. That doesn't mean it's going to last another 10 or 15 years. We all know that. There have been some that have only lasted 5 years, some that have lasted less than that. So we'll definitely see. We're more than halfway through, so I would assume we don't know what's going to happen. I would assume we'll finish out the rest of the year positive to some degree and things will be fine. But again, you got the Delta variant and whatever other variant is out there, which I just hope this whole thing is over. But anyway, that's what a bear market is. That's what a bull market is. If you have anything else that you want me to define or explain, let me know in the comments on public. Let me know on the comments on YouTube. And the best way that you can help not only the channel but actually help your question get answered is if you are a subscriber on YouTube, because it gives you like this tag on my end. When I look at it, I can quickly see like who's subscribed, and those are usually the ones that pop out first. So trying to help you out. All right, so that's it for me. Talk to you guys later. Bye.